Caterpillar is a really well-known company that manufactures big machines, big earth movers, trucks. Their products are used to build out infrastructure, to complete big construction projects, for waste management. You name it. These really big, tough jobs oftentimes require Caterpillar machinery to get the job done. And this company is a big success story here in the US. Big demand for their products here in the US, as well as in other countries that want their equipment. For example, mining operations really depend on Caterpillar. So it's been a big success story. The stock's up considerably this year. It's been a really good performing stock. I wanted to analyze the company, see what they're all about, maybe appreciate how good they're run, and see how close they are to their from the fair price to the actual stock price that the stock's being sold. See if the stock's being sold at a discount or being sold at a premium. Hey, thank you for watching this video. I'd like to ask you to become a paid member of the community if you get a lot of value from the videos, the live streams, and just being an active member of the community. Got 3 levels to choose from with varying perks. I've got a level at $9.99, which gives you access to a badge that I'll see on live streams and will be able to respond to your comments that much quicker. Advanced investors could look for a $24.99 per month level. And what that includes is a member only video conference every week, as well as chat responses on Discord that I could collaborate with you on Discord with. And then super investor level, that's about $100 a month. That includes a one-on-one call every month for 30 minutes. So we can talk through whichever topic you would like to talk about. Thanks for your consideration. Again, thank you for watching and consider being a paid community member. I'd really appreciate that. As mentioned, Caterpillar is a big cap stock. Its market cap is $190 billion. Its revenue, $66 billion per year. So it's a big company. It's been around for a long time. They are nice and profitable, and they have a PE which seems reasonable at 17. This is an industrial stock. It's not a big tech stock that would have, I don't know, a 50 or 100 PE. It pays a dividend of 1.44, and analysts say that it is being priced at a premium of 14%. Over the past year, the stock's really worked, up 45%. And over the last 5 years, it has absolutely worked with appreciation of 209%. Very nicely done, Caterpillar. When we look at their financials, that's where I get a little bit concerned. They're growing 2.47% in the trailing 12 months. When I look at the monthly, they actually are going down in revenue. Now, that's a problem. Why is their stock going up so nicely, but their revenue is going down? Something's disconnected with the other. I'd like to see revenue, if they are increasing that well in stock appreciation, I'd like to see the revenue really doing well, to be consistent with the appreciation on the stock. So that's puzzling. Why is it the case that the revenue has been going down while the stock price is going up? I guess the brand of Caterpillar is really popular. The balance sheet's in great shape. I took a look at the balance sheet. They don't have excessive debt. It's well below 3 times EBITDA. From a cash flow perspective, they are doing really well with cash flow. In fact, I think that's what might be driving the reasons why the stock's really appreciated. It's a little over $10 billion. And you can see that historically they were lower. Now, it's always hard to forecast a situation like this because sometimes you think, well, are they going to return closer to that $4 or $5 billion level, or are they going to sustain that 10 billion? Now, the economy for heavy equipment, I'm not quite sure. It's good to see that China's growing their economy. The US is growing at a decent amount. It's not going to break any records. We got a new president coming into office. I'm sure they're going to have some good infrastructure projects going on to create jobs. But there might be a bad year here on the horizon for 2025. So I'm not quite sure they're going to sustain that $10 billion of free cash flow going into 2025. Analysts think very highly of the company, but they also think that the stock price is a little too high. It's really gone up quite a bit. 17 analysts cover the stock. They primarily look at the stock and evaluate based on earnings per share. And earnings per share look really good. In 2025, it's expected to be $23.21, and it's going to grow modestly by 8.75% in 2026. I'll use that number in my valuation that includes an earnings per share valuation as well as free cash flow discount valuation. Caterpillar produces really good free cash flows, and I'm going to value the company by looking at those free cash flows. I'm also going to value the company by looking at the earnings per share. Cash flow, I'm not certain and confident that they're going to do 10 billion again. So I'm going to go down to 75% of what they did in 2023. So it'll be at 7.5 billion as a starting point. That's still much higher than 2022 and 2021. When I look at the growth rate again, I'm not confident that there's going to be great growth for this type of industry. So I'm going to go with a 2% growth rate the first 4 years, and then long-term growth would be at 4%. A discount rate of 8.4%. I looked at that up using Meta AI, as well as that was close to what I would have used, which was 8.5% as a discount rate. When I discount those free cash flows, I get 151.7 billion. I add cash and take away debt, and I get to an equity value of 117 billion. The market cap of the company is 189 billion. So there's a pretty good premium on the stock using the discounted free cash flow method. Now, earnings per share next year is going to be $23.21. I'm going to be generous and give them an 18 PE because it's a very good brand. It's a good company. I've known of them for a long time and have a growth rate on that earnings per share of 5%. Based on those numbers, there's a discount on the stock of 12%. Now, I use the free cash flow method as the base of my valuation. So I take 67% of the blend from free cash flow method and 33% from earnings per share to get to a blended value of 21%. So it's a 21% premium that's being priced in the stock. Analysts thought it was about 14% sold at a premium. So we agree that the stock is priced a little too high. I think the Caterpillar business is really desirable. I think about their brand. I think about how trusted this brand is in heavy equipment. Miners depend on it. Big construction companies, infrastructure companies depend on Caterpillar. It's a real trusted brand. So they enjoy a nice, wide, strong moat to keep competitors out. But they do have some competition. John Deere is a competitor, and internationally, they have other competitors that will vie for business in international markets, especially. In a perfect world, I'd get this really desirable company at a small discount or even a modest discount. But unfortunately, they're being priced at a pretty good premium right now. So I'm going to pass on Caterpillar. This is not a good investment that is going to double in value over the next 5 years. At best, it would probably be an okay investment, but it could also come down in value, especially if the economy for big projects, big capital projects were to slow down in 2025. Caterpillar stock would probably tumble 10, 20, 30%. So it's a pass on Caterpillar, but it's a good company, good one to keep an eye on. Maybe take a look at it in 6 months, maybe 12 months. So that's my video on Caterpillar. I really appreciate you watching, and good luck investing in 2024.